Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome to the Kendall Report. I want to thank everyone that came to the live stream yesterday. I went through a lot of details about what I believe is going on in energy and some other sectors, so make sure you go back and watch that replay. We've marked all the timelines so you can find exactly what I was talking about throughout the 2.5 hours. Let's go ahead and get into tonight's video. As we come into Thursday, it's going to be about the claims numbers and CPI. The claims are expected to come in around 365,000 new continuing claims at 3.77 million last week. This number has just been stable between 3.4 and 3.75, so I don't really see anything materially happening there or any effects at all. However, the CPI is expected to come in at 0.4. It's interesting as we look at the 10-year Treasury trading at 1.49 yesterday, really acting as if there is no inflation and that it is transitory, just as the Fed has been saying it is. The question is it really? There appears to be some softening in the commodities, lumber and corn, and everything is pulling back. That was really hot, but it's going to remain, in my opinion, well above the 2019 levels once everything settles in. Even though we're seeing things back up, that doesn't mean the game is over just yet. Markets are acting as if it is, but there's a long ways to go before we'll be through this particular period. With everything from supply chain issues and other shortages in the economy, these things are not going to go away for a while. So expect to see a reemergence of this. I did go through in yesterday's live stream when I was talking about the 10-year. I got new objectives for 2.7 to 3% on the 10-year. It's not been confirmed yet, but they're just new Fibonacci projections that came out today. So I'll be watching those as we go forward. But for right now, I think we're at the extreme levels on the 10-year. We should start to see it pull back into around 152, 154. As I mentioned in yesterday's live stream, I'm looking at around a 148 to 165 range for a while here. We should see some consolidation. But as Thursday unfolds, we're going to see the markets potentially challenge that 4230 level basis the S&P. We keep getting rejected. We were up at around 4235 again, 37 I believe was the high, and we got rejected back and we closed lower on the session again. So we keep seeing this rejection, and the real question out there, is it going to be a big rejection? But I see the downside, and 4170 is about the maximum downside in this pattern for the moment anyway. Thursday is likely to be a pivot day in the pattern. We'll be watching some key levels for some sort of trigger and some indication what's likely to come on. Quick mention, I'll go through the details in a minute. We did see a slight negative rotation in our database, but nothing material. So let's go ahead and take a look at the charts, see how they're set up for Thursday's opening. As I go through the WaveTech database, we did see 381 buys with 582 sells. We did see the percent bullish downtick to 62.82, so we're right at that 62% level. The next couple of days will be important to moving the markets forward, and as I mentioned in the opening comments, I do expect to see some challenges to the upside on some of the key levels. As we look forward to the next couple of days from the database viewpoint, we're going to need to get above the 68% level probably by Wednesday of next week, or we could start to see some further negative rotation. So we're definitely at a critical level. As I review the S&P 500, we're trading at 4213, down 550 on the evening. We're coming down to some critical levels as we look at the market grid for today. S1 is 4203 so far overnight. We've had a 4211 low. We could see that level challenged. S2 4197. The key number in the pattern though will be the 4203. The 10-period moving average is at 4201. We don't have a lot of positive strength on the ppm1, which would suggest that this will hold, but as we look at ppm2, it is exploding. It's at 0.18. So this is telling us that the underlying support at 4174 is substantial, and this is what I was mentioning in the opening comments. There's substantial support at 4170, 4174. I do not see the market getting through that level on the downside. As we look at the SPX, the 10-period moving average on the cash is 4210. We went out yesterday at 4219. Looks like we will challenge this 10-period moving average, 4210. The ppm1 is only up 0.07. ppm2 will come up substantially when the cash market opens tomorrow, just like with the futures. So we'll see a sharp increase. That's at 4176. So all these numbers map out pretty closely. So any downside will be limited to the 4176, 4170 level. If we look at the market grid for today, the S1 is 4214, S2 4208. So somewhere between an S1 S2 should be the low, and there the key level on the upside will be 4230, which was R2. If we get through that level, then we're likely to see some further strength from there. But there is limitations as volatility remains low. Next market that I'll cover is NASDAQ. NASDAQ continues to hover just above the 10-day moving average, 13,523. Looking at the market grid for today, S1, 13,771, S2, 13,735. So that's a little closer to that 10-period moving average. I do expect to see an S1 R2 today, 13,771 with a high of 13,872. We continue to just remain in this very narrow range, but just like in the S&P, as we look at the PPMs, ppm2 is starting to accelerate and is in trend mode, which suggests that we're starting to see the beginnings of a new trend evolve. We still need a couple more days to get the market in position to move sharply higher in the pattern. The final market I'll cover tonight is gold. Gold is trading down toward the 21-period moving average. That is at 1886, the low overnight, 1886.30. We'll also look at S2 on the market grid is 1886. So we're coming down to major support. It's possible to trade down to an S3, even to the STX, which is 1877. But this 1886 level should be reasonable support. ppm2 is up at a 0.16. That should be an adequate amount of upward pressure to hold this level. The upside resistance is going to be at 1897. Looking at the market grid, R1 is 1899, R2 1904. And as I've been discussing over the past several sessions, that there is substantial resistance between 1904 and 1909, and the support levels down at the 1877 down as low as 1855 are substantial. So we could remain in this sideways range, but I do think this 21-period moving average will be the dominant demand line in the pattern. This will complete the video for tonight. Thanks for watching. Make sure you watch the replay of yesterday's live stream. Thanks for watching. We'll talk to you tomorrow night. Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up. Click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now. Just click the link below.